Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at something called a head and shoulders pattern. Now, the head and shoulders pattern is simply when a market is rising, it pulls back, it rises even further, pulls back, and then forms a lower high. So it's a higher high, pulls back, higher high, pulls back, lower high. It shows signs of exhaustion. There's your head, there's your shoulders. Pretty straightforward pattern. A lot of people like to trade it. There's what is known as the neckline, which is where the two shoulders meet. And once you break down below there, you start shorting. You put your stop loss on the other side of this shoulder here, and you aim for the height of the pattern itself. Now, it can and often will go further, but that's essentially your minimum target. Another thing that is worth noting when it comes to head and shoulders patterns is that they don't have to be particularly straight. So let me show you an example here on the chart, which you may not see right away. Now, it is not particularly straight. You can see that it's basically like this. Furthermore, you could also even stretch it out even further, and you could say, this is your head and shoulders pattern. Either way, it's telling you the same thing. It's telling you that the market is running out of momentum. Your stop loss goes there, and you aim for the same height as this, which is basically where it hit right away. These are very common patterns, and a lot of traders like trading them. Here's a smaller one. And again, you could put your stop loss right here or your entry right here, and your stop loss just above this shoulder. In that scenario, the market is going to be aiming for the height of the pattern on a break, and you can see that's exactly where it went. So let's go to a different chart. And another thing about head and shoulders patterns that you should probably keep in mind is that they're more effective on higher time frames, but that's true with all things technical analysis. But you have to be really quick to take your losses if you are, in fact, going to experience one in a scalp trade. I can't iterate that enough. There's a head and shoulders pattern. There's your height. There's your target. Stop loss goes back here. Pretty straightforward. Like I said, though, once you blow through that shoulder there, if you were to turn back around, that's a sign that the trade just simply isn't working in your favor. Let's do engine. So here is a slightly messy one, but it tells you the same thing. Shoulder, head, shoulder, breaks down. However, notice here, that shoulder gets broken, so you should be out of this trade, even though eventually it worked out. So if I go to, say, like the 30-minute chart, or you know what, let's even do like a daily chart, you will find that it is much less common. And the reason is that it takes a lot more effort to make the pattern appear. On a 5-minute chart, it could just be somebody big getting in and out of the markets. But like on a daily chart, you really have to work to make it happen. And in fact, on this chart, I don't see any really clear-cut examples. Now, let me see if I can find one like on Bitcoin, a little bit more liquid market. You can somewhat make an argument one here. Once we break that, which happens to be support anyways, we clearly get that target. So in the next video, I'm going to look at this in a practical sense, like how you would have used this scalping the crypto markets. And welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. This video is an example video of how I would go using double tops and double bottoms to scalp the market. So you'll notice Ripple here. We have this double top that we talked about in the explainer video. You'll also notice that we do have support down here in this M pattern or this double top. Breaking down below, it does have the market entering a bearish phase. You can see that clearly the top has been major resistance previously. And of course, we do have several indicators that will tell us quite a bit about the attitude of the market, as it were. So let's put the 20 and the 9 on, and you can see that they cross here and they are breaking down. Notice that we bounce back up. This is a retest and we cross there. And that in and of itself might have been a reasonable indicator as to where we were going anyway. MACD crosses the 0 line right here as well. We get a cross over here. We come back, we cross above the 0 line and then back through it. So those are all signals. Not much in the way of divergence per se. There was a little here. You can see price going up, histogram going down. Let's go ahead and take a look at another chart. Let's do Ethereum. So let me zoom out a little bit. Kind of an interesting, kind of longer term forming double bottom here. You could call that a double bottom, or you could call the whole thing a double bottom, maybe even a triple bottom if you want. Just 3 attempts. Clear support and resistance right about here. So you, of course, want to see the market rally. You can see that the MACD crossed here and the histogram started exploding to the upside with volume. That makes a lot of sense as a potential trade. Your first stop, as far as like targets, would be here. So your stop loss is here or there. Now, if you don't wish to be as aggressive and you want to be a little bit more conservative to protect your capital, you can also put a stop loss below the most recent dip. Either one of those would have worked in this scenario. And after that, you begin to say, can we get up here? Obviously it doesn't happen right away, but it does eventually happen. So this is a situation where you could have taken some profit along the way, or perhaps even move your stop loss to break even before hitting that. A lot of candles here, but really not a lot of time. We're talking a few hours. So not necessarily a scalp if you're waiting that long, for the second target to be hit. But, it is what it is. The first target got hit within about 10 minutes. Let's take a look at Litecoin. Nice double top up here in an area of previous resistance. There's your support. Moving averages are spreading out. Now, another thing worth noticing is that when we broke down and then rallied again, we couldn't quite get back all the way there. And a lot of the trouble seems to stem with the 61.8. Let's go ahead and put the extension on. And notice how once you take this trade and you break through this area, the very first extension, 161, gets hit. And then eventually you hit the second and the third and the fourth extensions. So you could have taken off bits and pieces along the way. Every time you hit a target, you move up one extension, or you move to break even and take a quarter off and let the next one go, et cetera, et cetera. Obviously, it's one of those deals where you do have to be patient if you want the big returns. But the short-term scalps happen pretty quickly. Here's a double top here. So were there any signs of trouble? Well, yeah. I mean, the MACD is way up here, but further, further analysis could be done through the prism of, what are the longer term charts doing? Well, we're right here at an area that's been important multiple times. You look at this longer term kind of trend here. Where are we in the fib sequence? Well, right here, just under the 50%. Then we just kind of take off from there. We retrace the entire move, which of course makes sense. That quite often will happen. So we bounce back and then we go back to where we were to continue the trend. You can also make an argument that, you can do the fib extension after this massive spike to the downside. You can see we broke down. So you see this double top and you see the market rolling over. Well, you missed the double top, but you can see where the market wants to go and it keeps you in. So that's a nice little addition to even when you do miss the initial move. Double tops are very simple. And I would tell you this, another secret to trading double tops, when they get broken, like you go way above it, that's normally a sign the market's going to keep going. So it's a failed pattern. Failed patterns sometimes are just as powerful as the usual pattern. So in the next video, we'll take a look at a pattern that a lot of traders like called the head shoulders pattern.